market conditions remaining bearish in this bull market. We did run into that support area, that demand block, finding a little bit of a bounce right there, but could be getting some resistance now at that 5880 level. S&P futures sitting at about flat right here this morning. Neutral trend 7 and 7, and S&P 500. If we take a look at that again, the futures are moving dynamically real time, so you can see that starting to move back down a little bit, and that's adjusting this, whereas the SPX is actually just fixed on yesterday's close. So a little bit of change. You can see this indicator is dynamic, so it is shifting that back up just a little bit. We'll see if that holds into the open. We have majority bearish on the S&P 500 on the 1 hour time frame, as well as the daily time frame right here, but you're seeing a potential little flattening happening. We're running into this area on S&P 500 that could become a big demand block around that 382 retracement. 57.25 on S&P 500 really could be the next support area. That's sitting right here. You can see that block filling into that 38250 retracement location, coming all the way back over into here. That should represent an area of additional demand or buying. And if we're going to continue to see this trend move to the upside, we've got to retest and get some support happening relatively soon. And we could be in that location starting to see that happen. Let's jump over and take a look at Brett. Still majority bearish at 14 on stocks above their 50-day moving average. Again, that means that 80% of stocks in the S&P 500 are below their 50-day moving average. Obviously, they're trending lower, but that can fan out. That can become extreme. That 10 number is really the extreme point to the downside. So if we see some acceleration to the downside and we start to approach this level to the downside, and we start to approach this demand block on the S&P 500 around that 5,600 level, but higher than that, 5,700 really could be a area of support. But there's still a little bit of distance. Sorry, squeezing and moving this thing around. Let me just settle in here for a minute and get that to shift over. Here we go. So that 57.25 range to be watching for in S&P 500, and we're seeing VIX also with some bullishness right here, shifting back down a little bit yesterday in that overall price pattern, where we've got a pullback here on the 1 hour time frame, and that daily time frame still bullish, which is bearish for stocks on VIX. Compressing, still relatively compressed, has not expanded quite yet, but working on that. And again, as volatility expands, markets are selling off. So we're seeing the two setting up that way currently, with a little bit of a bounce here on VIX and the market as a whole. Bonds continuing this overall downtrend. This is the SHY, which is the short end of the yield curve, that 1 to 3 year treasury moving lower. And again, that corresponds to these rates here. These rates are moving higher. You can see that 2-year treasury is compressing and starting to move back up. This is not a fantastic thing for equities to see interest rates continuing to find strength right here. That's the 2-year treasury, and the 10-year treasury also continuing to move higher at these levels. So as bonds are continuing to sell off, we're seeing those interest rates move that other direction and start to move higher. We've got the yield curve, which is sitting at this level right here. Oops, don't know why my pointer changed. Sometimes I click the wrong thing over there. Anyway, that's you can see 440 on the 2-year and 480 on the 10-year. So relatively flat, still a flat yield curve, not quite inverted anymore, but still an issue with the strength of the economy, Fed dealing with inflation. That's the biggest factor still with dealing with interest rates. The Dow Jones Industrial Average, let's look at that price pattern here. We've got majority bearish at 9. Majority bearish at 12 on the 1 hour time frame. So a little bit of pausing, a little bit of potential support happening at these levels on the Dow. Triple Qs, neutral trends at 7 and 7, majority bearish on the 1 hour time frame, and also Russell 2000 continuing to show bearishness. Majority bearish at 13, so we're almost got the full 14 to bearish on the Russell 2000. Again, the stronger that these trends become to the downside, then the harder it is just that just creates more work, more resistance, and the probability that the trend is shifted or shifting is higher. The more it's obviously continuing to the downside, but we are at a area of support or approaching it with breadth, with location, with price location across the board. We'll see if we get anything here currently. USO having a nice acceleration on its trend, majority bullish at 14, continuing that overall uptrend, getting a pretty wide trend expansion now on the 1 hour time frame. That could create a little bit of a pause here, just a shortening, a pause of the overall longer term trend as it gets a little bit too extended and needs to compress back down again. Gold also getting some strength right here. It really hasn't done a whole lot in the last few days, but still working towards that overall bullishness. And it seems like it's kind of getting that coiled up spring. If markets continue to slide, could see gold have some price move higher. SLV also showing similar strength as gold. Let's jump over to look at a couple of stocks to consider today. ARIS, nice confirmation bar, increased volume the last few days, back into the momentum zone, and that is what we're ultimately looking for those price setups. Nice looking setup here on ARIS, and another one to consider today is ENFN, which also has nice confirmation bar back into the momentum zone and increased volume. Again, that momentum zone is anything above this 236 line. When we're connected with this Fibonacci tool connected here and here, we're looking for the stock to be up in this range, ideally. And as it enters into that range with a confirmation bullish bar and increasing volume, then that just adds to the probability of continuation of that overall trend. And that's what we want to try and do, is we want to try and get into those trends as they're entering that zone. And this is that early phases of how that looks. That'll do it for today's update. Everyone have a fantastic day today.